let's delve into some of the trade updates out on the day. Group 5 expecting interim headline earnings per share to be between 10 and 20% higher. The company's results are expected on the 13th of February. So let's take a look at the outlook for the construction sector right now. Stephen Meintjes, Head of Research at Imara S.P. Reid, joining us on the line. Stephen, thanks so much for joining us today. So very quickly, let's get your view on Group 5 right now, because another strong update. What's being priced in from a stock perspective right now, and what are your thoughts as to turnaround at the company?
Well, it is obviously underway, and I think the forecast is in line with market expectations. One point in the company's favor is it's pretty certain not to get much punishment from the competition tribunal, so that's a point in its favor, and that's one uncertainty overhanging the rest of the construction stocks.
Mm-hmm. So how's that going to play out from a regulatory perspective? Is this one of, I mean, what is the likely outcome of that on the Competition Commission front?
Well, it would appear simply to be a matter of, what the fine is going to be. Presumably it'll be a one-off, and presumably it's not going to be, company-shattering, game-changing. I think the market is, it's a bit of a negative that it's taken such a long time. I don't think it's, it's going to be significant, but I don't think it should necessarily put one off investing in the sector.
I mean, these kind of issues, or this kind of issue, of course, has been known about, but it's the quantum of the hit that construction companies will have to take. Is this priced into the stocks or the sector as a whole?
I would say it may well be priced in, and that's why the market is taking a fairly cautious attitude. There's obviously been some slow and careful accumulation in the sector over the last 3 months. But, given the overall uncertainties facing South Africa, I don't think foreign investors, for example, would be piling in here the way they have into our retail stocks. Well,
yeah.
Obviously they haven't.
Yeah, of course, that trend has turned. Looking at PPC also coming out with their update and basically saying they're looking at an improvement in 2013, very cautious still around Botswana and Zimbabwe, and also saying visibility in South Africa is a problem. What are your thoughts on PPC? Because we've got a new CEO coming in there, and of course, it seems that they're looking at acquisitions in Africa. No commentary on that, but what are your thoughts on to the opportunities that they might find outside of South Africa?
Well, I think they're going to be slow and careful. They've made 1 or 2 acquisitions already, and it's good that they seem to be happy with their situation in Zimbabwe. I think they have the right strategy, but obviously it's going to take time to unfold. And as far as the trading update's concerned, there are 1 or 2 PP specific issues, but I don't think it's a major negative.
Mm-hmm. Does it make sense to you that construction stocks are trading at PEs below 10? Are there any that you see the best opportunity for getting exposure to the sector if we are starting to see a better year?
Well, look, I think Group 5 is one, and then Wilson Bailey Holmes is more expensive. It's on a forward P of over 10, close to 11, and but it's had the better record, and it's always more highly rated. And then Basil Reid is probably, they've got a lot of work outside the country, as does Group 5, of course. I would steer clear of Murray and Robertson Avenge for the time being. So of the big 4, I think you can look at Group 5 and Wilson Bailey Holmes.